What is the current economic outlook for Canadian firms? This question has been on the minds of many, including economists and analysts. Let's delve into the Bank of Canada's first quarter survey, a treasure trove of data that offers a glimpse into the pulse of Canada's economic landscape. After almost 2 years of steady deterioration, Canadian firms are finally starting to see conditions improve. But hold your horses, this is not the full story. Despite the upturn, firms expect demand to remain subdued over the next year. It's like seeing the first rays of sunlight after a long winter, but knowing full well the spring is not here yet. Now, let's talk about the elephant in the room: recession. The mere mention of the word sends shivers down the spine of businesses and economists alike. But it seems the fear of recession is receding among Canadian firms. Fewer firms are bracing for a downturn in the coming 12 months. This is akin to a sigh of relief echoing across the corporate landscape. Now on to inflation. Remember the time when the number of firms expecting inflation above 3% for the next 2 years was like a mountain peak? Well, that has taken a downward turn, like a hiker descending from the summit. This is a crucial indicator for economists and analysts who are trying to predict when the Bank of Canada might start cutting interest rates from their current 22-year high of 5%. The bank, which has a 2% inflation target, has hinted at reducing rates this year, but has been coy about giving a definitive timeline. Inflation hit an 8-month low of 2.8% in February, adding another layer of complexity to the economic puzzle. In conclusion, the first quarter of this year has seen a slight improvement in business conditions, as reported by firms across all regions, sectors, and sizes. This uptick in sentiment is a welcome change after nearly 2 years of decline. While the economic conditions are showing signs of improvement, the firms are still cautious about the future. Inflation is a crucial factor in the economic outlook. So, what do Canadian firms expect when it comes to inflation? Inflation can be a tricky beast to tame, and its impact on the economy is undeniably significant. It's the specter that keeps economists up at night, and understanding its potential trajectory is key to navigating the economic landscape. Now, when we take a look at Canadian firms, we see an interesting trend. In recent times, a decreasing number of firms are expecting inflation to be above 3% for the next 2 years. This is a significant shift in perspective from the previous year, where a larger percentage of firms were bracing for a higher inflation rate. It's a change that signals a potential easing of economic pressures and perhaps a glimmer of optimism. But how does this fit with the broader economic picture, you might ask? Well, let's take a moment to talk about the Bank of Canada's role in this. The Bank of Canada, or the BOC as it's commonly referred to, has a 2% inflation target. This target acts as a compass, guiding the BOC's policy decisions. At present, the BOC's interest rate stands at a 22-year high of 5%. This high interest rate is a tool used by the central bank to keep inflation in check. However, with firms expecting a lower inflation rate, the question now becomes whether the BOC might consider reducing these interest rates. But before we get ahead of ourselves, it's important to note that the BOC is playing its cards close to its chest. While it has indicated that it might be able to start reducing rates this year, it has declined to give a specific timeline. This leaves us, and the rest of the economic community, in a state of anticipation. So, where does this leave us? Well, it's a complex picture. On one hand, we have firms expecting a lower inflation rate, which could signal a more optimistic economic outlook. On the other hand, we have the central bank maintaining a high interest rate, a move that is typically associated with keeping inflation in check. Inflation expectations have tempered, but the central bank's interest rates remain high. Let's shift focus to sales and business conditions. What changes are Canadian firms experiencing? After a period of almost 2 years where the business environment appeared to be in a downward spiral, Canadian firms are now beginning to see the light at the end of the tunnel. For the first time in 4 quarters, businesses are expecting their future sales to increase. This is a significant development, as the anticipation of boosted sales is a clear signal that companies are regaining confidence in the economy. Another positive sign is the improvement in the business outlook indicator. This broad gauge of how firms feel about their prospects has shown a notable uplift, moving to negative 2.42 in the first quarter from negative 3.09 in the fourth quarter. This shift may seem small, but it's a clear indication that the business sentiment is moving in the right direction. The survey also reported a slight improvement in business conditions during the first quarter. This uptick in sentiment is not confined to a specific region, sector, or firm size. Instead, it's a widespread phenomenon observed across all regions, sectors, and firm sizes. This broad-based improvement suggests that the economic recovery is not just limited to a few key players or specific sectors, but is a nationwide trend. It's important to note that these changes are not happening in a vacuum. They are the result of various factors, including macroeconomic policies, global economic conditions, and internal business strategies. While the road to recovery may still have its bumps and turns, these positive changes in sales and business conditions are a testament to the resilience and adaptability of Canadian firms. As we move forward, these improvements in business conditions and sales outlooks will play a crucial role in shaping the business strategies of Canadian firms. They provide a glimmer of hope and a much-needed boost to the morale of businesses that have weathered the storm of economic uncertainty. Business conditions and sales outlooks are showing signs of improvement, a positive indicator for Canadian firms. Recession and inflation expectations are critical to understand the economic outlook. What do the latest figures tell us? Let's dive right in. A key aspect of the economic outlook is the anticipation of a recession. Interestingly, there's been a decrease in the number of firms expecting a recession in the next year. From the fourth quarter of last year to the first quarter of this year, the percentage of firms expecting a recession in the upcoming year dropped from 38% to 27%. That's a significant 11 percentage point decrease. Now, let's move on to inflation expectations. Inflation is a fundamental economic indicator affecting everything from the price of goods to interest rates. The expectation of firms for inflation to stay above 3% for the next 2 years has also shown a downward trend. Once again, comparing the fourth quarter of the previous year to the first quarter of this year, the number of firms with this expectation fell from 54% to 40%. This 14 percentage point decrease suggests a softening in inflation expectations. But what about price changes? It seems that firms are also less inclined to make large or frequent price increases over the next 12 months. This is yet another positive sign. After all, frequent price increases can be a symptom of high inflation and economic instability. So what does all this mean? Well, it points to a more optimistic economic outlook. The decrease in the number of firms expecting a recession implies more confidence in the stability of the economy. The drop in inflation expectations suggests that firms believe the economy is less likely to experience high inflation rates, and fewer firms planning large or frequent price increases could indicate more stable pricing and less economic volatility. In conclusion, these trends suggest that firms are becoming more positive about the future. The expectations for recession and high inflation are decreasing, contributing to a somewhat more optimistic economic outlook. Demand and optimism are two important factors in the economic outlook. What are Canadian firms experiencing in these areas? When we delve into the heart of economics, demand is one of the primary driving forces. It's like the heartbeat of the market, pumping life into the veins of businesses. But currently, Canadian firms are reporting weak demand overall. This is not a trivial matter. This subdued demand can put a damper on the growth and profitability of firms. Yet, it's essential to remember that economic cycles are just that, cycles. They ebb and flow, and this period of subdued demand could simply be a low tide before a surge. Now let's talk about optimism. Optimism is the light at the end of the tunnel, the belief that things will get better. It's the fuel that keeps businesses going even when times are tough. And guess what? There are signs of returning optimism among Canadian firms. These signals are coming from different areas, painting a picture of a potential upturn on the horizon. Let's start with overall conditions. After almost 2 years of deterioration, firms are beginning to see the landscape brighten up. This improvement is not concentrated in a specific region or sector, but is reported widely across all regions, sectors, and firm sizes. This broad-based improvement is a positive sign, indicating a potential shift in the economic tide. Next, we have the sales outlook. For the first time in 4 quarters, firms are anticipating an increase in future sales. This expectation is another beacon of optimism, suggesting that firms believe the demand will pick up and propel their sales forward. Lastly, employment intentions. Firms are beginning to envisage a future where they're hiring more people, a sign that they're preparing for growth. This employment intention is a direct reflection of a brighter economic outlook. So, while the demand remains weak, these signs of returning optimism are like the first rays of dawn after a long night. They hint at the potential for a brighter economic day for Canadian firms. Despite weak demand, there are signs of returning optimism among Canadian firms. In sum, what does the economic outlook for Canadian firms look like? After almost 2 years of economic hardship, Canadian firms are witnessing an upswing. The Bank of Canada's survey reveals less recession planning and a decrease in inflation expectations. Future sales are predicted to increase, and there's a slight improvement in business conditions. Despite the lingering weak demand, there's a sense of cautious optimism. The economic outlook for Canadian firms is cautiously optimistic, showing signs of improvement despite ongoing challenges. As always, only time will reveal the full economic picture.